This is our Forex blog for January 17th, 2013. And one of the things I'm working on, there's no release date set in mind, but probably 2 weeks to 2 months out. I'm not going to be replying to emails asking when it's going to be out, but amongst all the things I'm working on, this is one of the things that I think has greatest promise. And in the past, we've always used our currency meter and various statistical tools we've developed to show which currencies are strong versus all the rest, which ones are weak. But now by seeing actual levels, creating an index of each currency, this is an index of the euro, this is an index of the yen, you can actually see breakout levels, you can see pullback areas. If they don't break the previous low, that's a very good sign. Looking at our old currency meter, you might have said, well, there's some strength, the 30-minute trend's up, daily, weekly, monthly trend's up, but during this little phase right here, it looks like there's pretty intense short-term weakness. But using the actual index itself, you can see this pullback wasn't enough to break these lows, nor was it enough to even come down and test those lows. So when it broke out right here at 3 o'clock, the euro was a very high probability one to be buying. And on the flip side, one of the weaker pairs, you can see the yen. It was rallying up last night, made a nice little double top right here, pulled back with a lot of weakness. During these little tiny up moves, there's not nearly as much statistical strength as there was weakness. And when it breaks that nice little rectangle pattern right here, you want to buy other pairs against the weak yen. When the yen's on the bottom of all the pairs, the euro breaks out to the upside, the yen slightly a little bit later, 3:45, breaks out to the downside. But it's a very high probability trade at 3 o'clock to be buying the euro yen. And once this breaks down, it's even higher probability. And by following and watching the individual charts, you can just simply, for instance, you might want to stay long the euro as long as it stays above this low here. Once it goes up and kind of goes sideways, you move your little levels up, and you can stay long the euro yen as long as this keeps making higher highs and doesn't pull back. As you can see, it went sideways here for a long time, never really breaks that low until about 8:30. The exact opposite could be said about the euro yen. You short it, you put your mental stop right above this level. As long as the yen is going down, you move your stop above here, above here, above here. You can see, maybe at some point at this 9:30, you're out of it temporarily. Let's take a look at the actual chart of the euro yen. This is how I have been trading with this index with great results. You can see a little bit after 3 when this breaks out. The euro yen also has a nice little sideways rectangle pattern right here. And by watching the actual euro yen, you can see it going up, pulling back a little bit, going up, pulling back up, back up. But by seeing the euros going up against every other pair without much of a pullback at all against other pairs, and the same thing with the yen, you have more patience to hang on to this trade. And you can see it went from 118 to 119.50. It's 150 plus pip move, and that's how you can use this to your benefit. Once I release it, again, no timelines, 2 weeks to 2 months probably. You can see here a Canadian dollar index, and by seeing what the longer term trend is, you can see this level here was a very significant one. It broke down earlier today and came back above that range. Really, as early as 6:30, you could be looking to buy this. The weekly trend shifted back up just from a slightly downtrend, and previously it was strong up. The monthly trend's up. This move here had a lot of statistical strength, and during these pullbacks right here, it wasn't able to get back below this very significant level low, 100.6. I have our own proprietary index method that I have created these with, but one thing I found is that they tend to hold the levels, 100.6, 100.7, 100.8. They tend to act as support resistance for whatever reason. I've seen this happen for the last week and a half, and if the trend is up and you get a pullback to these levels, you can kind of trade off of it, knowing that if it breaks that level, it's probably going to go down to the next one, and so it's a very nice place to buy pullbacks in the CAD, especially right here and here, 7:30. So what currency, when this one was going up, which currency was weak, 7:30, 8:30, that you could have traded to the downside? Well, the weakest one throughout the day was the yen, and it had a little bit of a pullback right here and here. But by looking at the regular chart, you might, or the statistical FX trend intensity, you might have said, well, I don't know about this. This is showing a little bit of strength right here. But looking at the actual index chart, it doesn't look that significant. It's not, hasn't broken above this level high or this level high. So not only can you use trend lines, patterns, but you can actually use levels. You know, uptrend is a series of higher highs, higher lows. Downtrend is a series of lower lows, lower highs. And as long as, you know, currency's going down, it's not able to break the previous swing high, you want to stick with it. So again, it was very high probability using this new chart tool to be buying this little pullback right here and here, because it had a false breakout down, it rallied up. Or you could just simply wait for, you know, the breakout of this level here. But at that point, half the move is over. So if you wanted to get into a trade here and here, maybe you had a small loss and you got into this trade with a very high probability win. Let's bring up the CAD yen and look at the chart itself from 7:30 to 8:30. So here you can see clearly the CAD yen is trending up. You got the pullback here at 7:30. And again, if you had put your stop underneath the low here, I was wrong about my estimation of the first trade being a loss. It went slightly your way, pulled back, didn't even break these lows, and then took off again. And notice coming up to 9 o'clock right here, if you're in the CAD yen, you want to see the actual CAD chart making new highs. Look what happened. It rallied up, pulled back, came back up, wasn't able to break these highs. So coming up to 10 o'clock right here, it's pretty, you know, clear that the CAD might be topped out. And so looking at this actual chart here, assuming you stuck with it during this drawdown, you know, it might be done at that point. Now, most people are going to get into a trade and run a trailing stop, and you would have been out of this maybe with a 25-30 pip win. Notice this pullback right here, and it's going sideways. When it breaks out again to the upside at 1050, pretty high probability place to be buying the CAD. The yen was just so weak today that it makes sense too. And you can see this nice little trendline wedge pattern breakout. Very high probability, and it rallies up another 50 pips. And if you had watched this chart, you can see it kind of went up. Maybe as it kind of went sideways right here at 11:35, you might have got out of that trade. Notice 11:35 right here, you had a small win. It pulled back again, started its way back up here at 12. Maybe you would have got back into that trade here close to 12. So here's 12 o'clock. It broke out over the highs. You're back in it. And notice it slightly made a higher high here, but was not able to hold the high. And that's a very big reversal pattern when using this as an index. So when it broke out above the high and came back down underneath it, it made a new low right here from the previous swing low at 110. Pretty high probability place to get out of your trade. And here's the 110 area. It obviously pulled back and continued up again, mainly because of the weakness of the yen, not because of the strength of the CAD. So you're going to be watching these both at the same time. You can see the CAD. I mean, the CAD lost some strength. However, the yen just kept getting weaker, and that's why the CAD yen continued. But some of the highest probability trades are when, you know, you get breakouts in both of them. And you can also anticipate much better in this. You can draw trends. You can. Yesterday, the pound was extremely weak against most currencies. The weekly and monthly trend is very weak, reflecting that. And you have a nice little trend line right here. Notice when it finally broke that trend line, coming up to a little bit before 8. Let's find the exact time, 7:40. You want to sell the pound at 7:40, and the dollar really wasn't either strong or weak today. It just kind of was sitting there. Obviously, it's going to be stronger than that other currency, but at 7:40 coming up to 8, you can see this actually a little bit after 8. the dollar starts to rally up, but very insignificantly. You could certainly at 740 sell the weak pound versus basically the dollar that's flat. A weak currency is going to go down against one that's not weak. And remember, you had that heads up on this trade at 740. That would have been right here. And this particular chart really didn't break down and make new lows for about an hour later. But notice it fell 10, 20, 30, 40, 50, 60 something pips. And you had a whole hour head start to look for that trade. And that's what I'm finding over and over again. This tends to be a leading indicator for many reasons. One, double tops, you can see them on here right near the highs, and so that means if you looking at the weekly monthly trend, knowing how weak it was, seeing the strength on the way up here, it was not that much, knowing that it failed at that level, and also a half number. The half and whole numbers tend to be very significant, even these synthetic indexes I came up with, because of the mathematical calculations on how I did this. You will see that for yourself when you get it in the next 2 weeks to 2 months. I don't have a date for the for when that's going to be released, and I'm in and out a lot trading, working on automated systems, but I have been using this a lot to trade with, and it's just phenomenal. As you can see, spotting a double top is the early indication of a reversal, breaking the trend line, and you can see it took it a whole hour after that trend line on this was broken, because other people aren't really looking at this index other than myself. I'm the only person who's trading with this right now. Now the pound 740 was showing some weakness. You could have also traded it against the CAD, which broke out and was making higher highs. So the pound CAD probably would have most likely fallen even more and probably closer to 740. Here's this one right here at 740. You may just want to wait for these lows to get broken, but look at how far it fell. 10, 20, 30, 40, 50, 60, 70, 80, 85 pips. And so obviously it did fall more than the pound dollar, because the CAD actually was breaking out and was at the highs of the day. Another one that you could have traded, the New Zealand was quite strong yesterday. As you can see, it was trending up. And one of the things I found out on this is a lot of times with the index, fibs tend to be pretty decent places to buy. When you got this 50% pullback of that yesterday's explosive move up, as long as it stays above 101.50, it's a pretty high probability one to be buying. Notice how that area held all day. But specifically, once it broke out and made new highs for the day at 9 o'clock, that's a pretty high probability currency as well to be trading against the pound. Pound New Zealand, and it might not have waited until 9 o'clock to continue falling, but again at 740, the pound was likely to go down. The New Zealand was very strong yesterday and was holding key levels today after a pullback. Very high probability trade, and it fell way over 120 pips down. And so that's why using these indexes and seeing key levels is very powerful. Now here's the Australian, which was trending up today. Notice also, the weakness of it yesterday. It rallied up. You have a 1, 2, 3 low right here. But once it breaks these highs here, it's pretty high probability. And you can always look at that level. If it breaks out above and comes back down, you look to go short, because yesterday's trend was down. As long as it's above that previous swing high, you're looking to buy. And anytime you see a multi-hour sideways range with a breakout, this one broke out to the upside here at 745, whereas the pound broke out to the downside. It doesn't take a rocket scientist to know that you want to sell the pound Australian, especially around 740. And you can see 740, this one fell 10, 20, 30, 40, 50, 60, 70, 80 pips. There's not much better than getting into a trade that just keeps going your way. 10 pips a day doubles your account every 2 months. So obviously it doesn't take too many days of 50, 100 pip moves to double your account. And so therefore that's why this is going to be my new focus, to get new traders trading profitably And when my own personal life calms down a little bit, I plan to resurrect a new chat room and call out my trades using this technology and some of the other things I've been working on that use external data sources that I might not be able to release in our product because nobody's going to spend $400 a month on the data. Very likely, very few people are willing to do that. So by having a chat room, I can call out intermarket analysis type trades. But you will find that this index of each individual currency, along with our statistical tools, should, to say the least, dramatically improve your trading. So if you don't have an account with us yet, go ahead and open it. Probably by the time your account gets set up and funded, we'll have this released.